Hello and welcome to the DYB Podcast. For the last 2 decades, today's guest, working as a master tax advisor, IRS enrolled agent, has watched hundreds of small business owners lose thousands of dollars needlessly. So he's on a mission to provide entrepreneurs the knowledge to build a solid foundation under their business to keep more money in their pockets and give less to the government. Chief Business Education Officer of Seagull Technologies, Roger Pearson, welcome to the show, my friend.
Thank you for inviting me.
All right, pleasure. Well, let's kick it right off. What mistakes do people make that end up costing them a lot?
When it comes to small businesses, which is mainly what I deal with, one of the things that I find is people, they've got this dream to go out and they've got to create their own business. They want to just chart their own course. And they just go out and they just start working like crazy. But this thing they don't stop and think about is they need to educate themselves a little bit about what it takes to run a business, because this is something they don't teach you in school. Unfortunately, it is. And they don't even teach this stuff in college, the basics of building a business. I've had, for several years, I taught tax classes, actually. And it would amaze me that I've had business majors in my classes, and they would tell me that they were never taught this stuff in school. And when they ask about this type of stuff, the professors would tell them, well, you got to go learn that elsewhere. They seem to be only interested in, preparing them for the corporate world, and they're two different things. They're two different paths in life. And so I have people come in, especially the second years. And yes, I have had people drop off boxes of stuff before. But I have to spend usually the first 3 years educating people just on the basics of running a small business. And there's 3 aspects to that. The legal aspects, the paper organization, I should say, and the tax aspects. And the tax aspects is actually one of the most important ones, because you can pay up to 50% of your net profit in taxes if you don't do it right. And you have to educate yourself. You really do. And so that's what my mission is, to educate as many small business people as possible so that they've got a solid foundation under their business to build it upon.
So what are some examples of some mistakes, most common mistakes you see?
Some of the most common mistakes is, for instance, people go out and they'll buy things, cash and things, and not keep the receipt. Okay. Or I have people that, well, my accounting system is my checking account. Well, no. It shows the money coming in, the money going out, but it doesn't prove that you used it for business. And if the IRS was to audit you, that's what they would have a problem. A lot of people, what they do is they commingle the funds. They don't open a separate bank account or a separate credit card account for their business. They just do it all out of their personal account. And that's another big red flag if you are audited. And it really makes it difficult to put together a set of books for you and do taxes at the end of the year when you do that. So, if you're going to start a small business, one of the first things you want to do, besides the legal stuff, is open your own business checking account and credit card accounts, and keep everything totally separated. So that's a biggie there. Another thing that a lot of new entrepreneurs don't do, if they have travel expenses, they don't keep a mileage log. Now, if you don't keep a mileage log and you are audited on your returns, they can throw that entire deduction out. And the mileage is usually one of the largest deductions you're going to have in a business, unless you have like a storefront or something. But if you have any kind of service business where you have to travel around, or any kind of sales business where you have to travel around, your mileage is huge expense, and to cut down your net profits for tax purposes. So you have to know how to do it properly. the IRS, what they want to see is they want to see the date, the purpose, a business purpose, and like your client name or going to Staples to get office supplies or whatever, and then the mileage, day by day by day. And there's some software solutions that'll do that for you nowadays. You press start and end, and it records it for you and prints you out a thing at the end of the year, which is great. But most people don't know that this is important, especially people in that are doing things like Uber or those types of things.
Mm-hmm.
The Uber report that they give you at the end of the year shows you mileage, but it's not the true mileage. It just shows you the mileage while somebody was sitting in your car. It doesn't show the mileage going to pick up the person or going back home at the end of the day. And that's why you need to keep your own log in addition to that, because you're cheating yourself if you don't. So those are just some of the glaring mistakes.
So how does one know when to take actual expense deductions versus mileage?
Generally, 9 times out of 10, your just mileage deduction is better. Your mileage deduction, for the IRS purposes, it includes like your payments, your gas, your maintenance, the tags, the insurance, everything. And it's pretty liberal. It's usually about 56 cents a mile at the moment. Or you can take actual expenses if you believe actual expenses is more. And a good tax preparer, if you're working with a good tax preparer, they're going to look at both of the sides of those and see which is better for you. Now, there are some instances where you have to actually do actual miles. For instance, if you have a fleet, if you were in the taxi cab business and you had more than 5 taxi cabs, you actually have to use expenses. If you're in an S corporation or a partnership without a recompensation plan, you have to actually, or the corporation owns it, you have to actually use actual expenses. You can't use the mileage log.
So, okay, thank you. What about, you mentioned the cabs with 5. Now, does that translate as well to our painting contractors who have 5 plus vehicles in their fleet?
That would be, yes, absolutely. And generally, if you built your business to that point, you're going to be incorporated as either corporation or S corporation or partnership. And in that case, you're going to have to do actual expenses anyway if the company owns the vehicles.
Okay, so as somebody's grown at that point, there's looking for more opportunities here for saving taxes. There's an opportunity to take a salary and draw, but we need to take a reasonable salary, and then we can take the rest and draw. How do you know what that balance is without getting in trouble?
That's a good question. The IRS actually has a table of average salaries for occupations that you can actually look at. But a general rule of thumb from the IRS is that they consider a reasonable salary of 40 to 60% of your net profit. If you're a sole proprietor or
Interesting.
or a like a one person
Mm-hmm.
S corporation or something like that. That's what they're looking for. Because if you have of course, if you have a sole proprietorship, 100% of your net profit is subject to taxes, state tax,
Mm-hmm.
federal taxes, state taxes, and unemployment and your payroll taxes.
Mm-hmm.
If you're an S corporation, of course, then when you go to the point of S corporation, of course, then you can shield part of your income from payroll taxes.
Mm-hmm.
And
Through draws.
yeah,
Mm-hmm.
yeah, you can actually, that's another thing. On an S corporation, you actually have to do a W-2 and pay yourself. If you're a partner in a partnership, you can't W-2 yourself. You just take partnership draws, and then it works out at the end of the year. So there is a difference. You can't W-2 yourself on a partnership, only an S corporation or
Okay,
a C
so
corporation.
thank you. So for the solo S corps out there, whether it's LLC filing with S corp election or S corp,
Correct.
they need to take 40 to 60% salary of their net profit. That's the guideline. Anything outside of that, the IRS, you've thrown up red flags.
Pretty much, yeah.
Okay.
Because all this money we just gave the IRS, they said, well, they're only going to go after people that make more than $400,000 a year, which is not really true. One of their mandates, and they don't advertise this, but one of their mandates, and I started seeing the letters coming out this last tax season, is they're going after people that are not taking salaries because they consider that evasion of payroll taxes. And
Wow.
and one of their main things is going after that. Their other main thing that they're going after that is you can't take profits out of your business in excess of your basis. The
How,
basis is yeah.
hold on. I'm sorry. How do you mean by basis?
Basis is what you have invested in the business. For instance, and and your accountant should be giving you a basis worksheet along with your taxes. A basis is, for instance, you start your business off by putting $25,000 in, right? And so that's your starting point for your basis. You've invested $25,000 in your business. Well, if you make a profit, that adds to the basis. If you have a loss, that deducts from the basis. So every year it changes. Well, you can't take money out of the business in excess of what you have in. You can't take a loss, I should say. You can't take a loss in excess of. If you're profitable every year, you can take as much profit as you want out. But what a lot of people were doing is they were losing money every single year on paper,
Right.
and they were taking that loss even though they had no basis in their business. And the IRS is really starting to go after those people. So we're going to see the audits for S corporations and partnerships go up a lot in the next few years.
Okay. So if I hear you correctly, a lot of our audience, they're $500,000, million, $2 million businesses, and most of them, the vast majority of them, are bootstrap startups. So very little capital to start with. If they are taking max deductions, i.e., showing losses too many years in a row, then they're throwing up red flags.
Right. Right. The IRS likes to see a profit 3 of 5 years. That's just a general rule.
3 out of 5.
2 out of 5.
2 out of
2 out of
5.
5.
Okay.
They want to see a profit. If you've got 5 years in a row, it's going to throw up a red flag. It really, really is. Now, if it's legitimate, that's fine, but they're going to take a look, and they're increasing enforcement in that area.
Okay, could I ask a question and make a point here that there's nothing wrong with being audited as long as you're prepared
Oh,
for the
absolutely.
audit, right? So being audited doesn't mean you're going to prison, does not mean you have a fine. They're just calling you out, and they're just saying, show us the receipts, show us the proof, right?
Correct. That's
Okay.
exactly correct. And the thing about audits is that you shouldn't go to the audit yourself. Hire somebody, hire an enrolled agent to go do it for you. I tell my clients, I've said it in many audits, and I tell my clients I don't want you there because you're going to say something that's going to prompt other questions. And so you need a professional to go into the audit for you. That's real important.
That's good to know. Right on. Okay, fantastic. Let's see here. Well, on the topic of the IRS, what or how, what can we do to keep more profits instead of paying more taxes?
Well, there's a lot of vehicles used. You hear about these huge mega corporations. They make all this money and they don't pay any taxes.
Mm-hmm.
Well, I mean, they do pay taxes, but not like we would think of it. And the reason they do that is because they use the tax laws to their advantage. And the small business person can take the same type of advantage of those tax laws as the major ones. Now, a lot of the business credits, of course, are only applicable to certain industries and certain size companies. But the basic things that we can use at the personal level are things like depreciation tables, Section 179s. And so this is a thing that your tax preparer should be talking to you about also. Now, as far as depreciation, let me explain depreciation, because a lot of people starting out have no idea what that is. Depreciation is when you buy equipment that has a lifespan of more than 1 year. The government says by default you have to spread the cost of that out. You can't deduct the whole thing the same year. By default, you have to spread it out. For instance, if you bought a computer system for your office, that's considered 5-year property. So you have to divide it up, and you have to take the deduction over the course of 5 years.
Mm-hmm.
Okay. And there's different ways to do that. There's also other things, like if you're a sole proprietorship or a single member LLC, you can use like some section 179 says, okay, you can expense the entire thing this year, or you can expense part of it this year and roll over the rest of it to the next year, which is great if you're a startup, because the first year you're not probably going to need a lot of deductions. But if you've got contracts coming in and you know you're going to make a lot more money the next year, that equipment you can buy, you can take very little 179 this year and you can roll it over. Now, you don't want to do that if you're an S corporation or a partnership, because that's going to penalize you. It's actually going to end up costing more. Then you have to go over here to special depreciation. Special depreciation is something Congress loves to play with. In 2022, you could depreciate 100% of what you bought that year. This year, it's only 50%. And some years it's nothing. It's something they just keep playing with. But I find that one of the problems I find is that a lot of accountants, the kind, you just drop the stuff off and they call you when it's done. They just automatically take 100% depreciation to get you the most loss this year. And that's not a good thing. Maybe you shouldn't. If you don't need the deductions this year, why waste them? It's not going to roll over. Why waste them? Push them off into a year you're going to need them. And these are the kind of discussions you need to be having about depreciation. I mean, I had a painting contractor was with me for over a decade, and he wanted to buy a house. But being self-employed, it's not easy to get a mortgage. So he had to show 3 years of tax returns, and they had to be within a certain profit range all 3 years for him to qualify for the mortgage he wanted. So I sat down with him, and we worked it over 3 years, and I worked the depreciation tables and things like that to get him in the profit range, so he was able to buy his house. And that's the type of work I do with my clients, and that's how I use the tax laws to their advantage, because they're out there. And if you're hiring somebody to do it, that's what they should be talking to you about.
Well, speaking of hiring somebody to do it, how do you know who to hire? Like, which tax professional, which accountants, which CPA? How do you know when you found a good one? How do you find a good one?
When you're hiring an accountant or a CPA or a tax professional, you need to interview them the same if you were interviewing an employee, because basically they're working for you. You're just not hiring them. You need to look at it as if they're working for you. So you have to interview them. But most people have no clue how to interview for this, because they don't know the tax laws themselves. And so they don't know the questions to ask. For instance, some of the questions you should ask, a lot of people think, well, if I hire a CPA, they know everything about taxes. And so I don't have to worry about it. Or if I say an accountant or a tax professional, they know everything about it. And it's not true. Most people don't know if to get your CPA certification, you have to take a couple of basic tax classes, but you never have to take another tax class the rest of your life if you don't want to. Now, a good CPA will, and one of the things I always tell people that if they're going to hire a CPA, one of the first questions that you need to ask them is, how many continuing education hours do you take in tax law every year? Because the vast majority do not.
Really?
And yeah, because, for most CPAs, their main business is accounting. And taxes is like a side thing that they make extra money on once a year. And one of the biggest things about that is you get an accountant that just always files an extension, because they don't want to take the time during tax season to get to you. And you end up in September, October finishing your taxes, which drives me nuts. But you see that constantly. It's just like the last year I had a customer come in that their account retired. And I said, yeah, I'll have it done in a week. And they said, What do you mean you'll have it done in a week? We always have to wait till September or October to have it done. I said, no, it will be done by the time of the filing deadline. Don't worry about it.
What are some of the, pardon me, Roger, what are some of the issues with filing an extension and waiting till September?
Well, a lot of people have a misunderstanding about that also. When you file an extension, it's an extension to finish your paperwork. It is not an extension to pay you the bill. So when you file an extension, you're expected to do as much of your return as possible to get a approximate amount of tax you're going to owe and pay the tax by the deadline. And then when you file it, you make an adjustment. Sometimes you get money back. Sometimes you have to pay a little bit more based on the final numbers. And that's a big misconception when people first get into taxes, and especially business taxes.
Thank you. A question: what's the distinction? So we've got accountant and bookkeeper. What's the distinction between an accountant and a bookkeeper?
Accountant and bookkeeper is basically the same thing. There's a difference between a CPA and a bookkeeper or accountant. CPA is authorized to represent you before the IRS, and a bookkeeper or accountant is not. That's yeah.
So all CPAs are also enrolled agents?
No.
What's the distinction there?
There's a big distinction. A CPA, their certification is in accounting, but it's a higher certification. They're supposed to know more about it. So the IRS allows them to represent their clients before in an audit, for instance. And lawyers can also by default. All right. An enrolled agent is the only form, the only type of representative that has to actually earn their degree or their certification by passing three-hour IRS tests, okay, on taxes, including all personal taxes, all business taxes, and Circular 230, which spells out all the penalties for not doing things right, and the ethics portion of it. So it's like having a PhD in the tax world. An enrolled agent is, because they're going to be the most versed. Are all enrolled agents equal? There's a lot of enrolled agents that they don't really specialize in taxes, so you have to be careful there. They're good at passing tests, but they may have not had a lot of experience in as far as the business side of it, even though they've had to pass the test for the business. So you have to, in your interviewing, you have to make sure of that also.
Thank you. So back to the CPAs, and when interviewing and looking for them, how do you know when you're going to find one who's not afraid to argue for you to the CPA versus being afraid to argue and not taking the deductions for you that they could?
Oh, well, here's the thing. The thing about that, if you're hiring a CPA and they don't want to sit down and talk to you, walk away. That's number one. Because I find that if somebody is going to do a good job for your business, they need to learn your business. I mean, every business client I have sitting down for me, I interview the point that I understand how their business works, how they want to work their business, and what they expect out of their business. Because unless I know those things, then I cannot apply the right tax laws in their case to do the best job for them.
Okay, thank you. So along those lines, like for example, there's a CPA who knows their stuff and they're not afraid to take the deductions. They're not afraid to argue them for you with the IRS. Then the other extreme is, and I'm just throwing them out there, this is not a recommendation that anybody should go to, but something like H&R Block, where they're I've never used them, but I would guess that they're not going to take max deductions. They're just going to fill in the minimum things to get it processed because they do not want an audit, right? Because they certainly don't want to have to argue it for you. How, when you're looking for a CPA, is there anything else besides, you just shared, do they want to get to know you and your business? Is there any other way to find out if they're willing to save you as much money as possible, even though they may have to defend it? They're not afraid to argue with
the question there really comes down to how much you know. And this is one of the reasons that I do what I do in teaching people the three aspects of building a solid foundation under your business. Because if you know this information and you go in and you sit down with your CPA,
Mm-hmm.
You're going to know what they're supposed to be asking you, and how to respond to whatever questions they do.
Mm-hmm.
I think the biggest problem when you're interviewing, when you're starting to work with a CPA or an accountant, is that you don't know what they're supposed to ask you. I mean, you're going in there and you're trusting them that they're supposed to have the knowledge to do whatever they need to do in your best interest, and that's not necessarily true. I mean,
Yeah.
unfortunately, some people, it's just a numbers game. You know, how many returns can they pump out in a year?
Mm-hmm.
And unfortunately, there are people in the large firms like H&R Block that are also like that. On the other hand, there's a whole lot of people there with their new business initiatives and things that they're really training people in business, and they're getting to the point where the things I'm talking about,
Okay.
they finally figured that out.
So
That's
you
good.
provide, thank you, Roger. You provide education
I
to.
do provide
Yeah.
education.
Could you
Now,
tell us about that, please?
I got frustrated, because I've been doing this 23 years now, helping small business people in the tax world. And I got frustrated because people would come in and they say, well, where was I supposed to learn all of this? And really, I mean, people don't have time to go out and search the internet and everything else. I mean, you can find all this information there, but how do you correlate it? How do you put it all together? How do you make it work together? And so I put together a website, and I put out a 9-part series I have called the Foundation Series. It goes into the very, very basics of all the aspects that you need to know about when you do a business. But I felt that working more with people, that I needed something more in depth, because I was seeing too many people come to me from other sources, and I was seeing too many mistakes. The mistakes were driving me crazy. And these mistakes wouldn't have happened if they knew the law themselves. So I put together a comprehensive online course. I consider it a college level course. This is the stuff they don't teach you in college. And it goes into every single legal format there is, the advantages and disadvantages, when you should start one, when you should advance to another one. It goes into how to organize your paperwork, not be an accountant, but how to organize all your paperwork so that you're going to give yourself the best chance of all the deductions that you're entitled to, and what you need to be taking to your accountant or CPA or tax professional. And the third part actually goes into tax structure, and it goes into the tax structure for each type of legal format and what the disadvantages and advantages of them are also. So it gets into depreciation and all the other things.
Okay. So
It's a complete course. I mean, anybody that takes this is going to have a real good foundation, because these three things affect everything you do in your business, and everything you do in your business is going to affect these three things. And you need to know them, and the better you know them, the better chance you give yourself of success.
what is the cost for the course?
The course is $797.
Okay.
It's an extensive course. It has 7 hours worth of video alone in it,
Mhm.
plus all the transcripts and a whole bunch of bonus items.
Yeah. No, that's a great price. That's a great price.
People have told me I'm not charging enough for it.
Yeah. Probably. It sounds like it. Yeah.
My mission is to help as many people as possible. So I want to
Mhm.
make it reasonable that
Mhm.
the small businessman is something they can afford.
Indeed. What's the website for that course?
Now, if you want to go to that course, I have a special link to that. It's called protectingmybusiness.com. And all of the other stuff, the free stuff and everything else, is at my main corporate site, which also has links to everything. And that is Seagull Technologies, Seagull spelled like the bird, technologies.com.
Fantastic. Roger, thank you so much for coming onto the show. You've been very insightful, and the insight you're sharing is valuable, and we all need it. And while we're also busy trying to run our business and get customers and get employees and get customers and get employees, we need to get sharp on the tax and accounting aspects of it as well. So I appreciate
Absolutely.
that. If anybody had a follow-up question for you, how should they reach out to you?
Well, if you go to my main corporate site at seagulltechnologies.com, click on contact, and you can send me a message. I will get back to you.
Fantastic. Thanks again, Roger.
Thank you.